Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a fall feeling but sunny Chicago day. It feels lovely here in the Midwest. Jake, we're going to jump to you. You are joining us from Wichita, Kansas, as a director of Feed Foundations. And should we just get this out of the way, Jake? Just kind of show us what's going on back there? Do we just rip the Band-Aid? Do the swivel. Oh, dude, that's right there. Dude, that's right there. Yeah.
Happy fall, y'all.
Paige never saw it coming. Paige never.
They're back.
They are back, Jake. Jake, it is September 4th. You could say on one side we're less than 2 months from Halloween, might be one way of saying it. Someone else might say we're a long ways away from Halloween, Jake. And your little market analysts are back. How are they doing?
They're doing pretty good. Little spooky season start here, pushing markets around a little bit. Doing pretty good.
That's
Doing
good.
pretty good.
That's good. Those two have been analyzing markets for a very long time. Very long time. And you know what, Jake? We've been doing it for a little while ourselves. I suppose we should probably get to that now. But first, even before we timestamp, Jake, I was in the Twin Cities this week in Minnesota. I was at the Ag Smarter Dairy Symposium. I had the pleasure and privilege being one of the presenters, presenting some of the grain and feed markets and farm financial health. So big thanks to EverAg for having me up there. Obviously, I was outdone by Miss Katie Burgess, who followed me. And then, of course, Phil Pleward ran a panel as the moderator with 3 brilliant participants from the industry, including the Serena Sharp. It was a very impressive group, along with some other EverAg colleagues throughout the rest of the day, and just some really awesome presenters throughout. So, Jake, you were missed. You would have done better than me as well. But hey, I set a low bar, Jake.
Well, I don't know if I would have done better, but I appreciate it. I'll try next week. I'm going to go see some folks.
There you go.
See if I can keep them awake.
That's exactly right. Okay, very good. Let's move forward with some timestamping, Jake, because it's just you and me today. And we're going to run through a bunch of updates here on the markets because we're out of the Labor Day holiday and in the month of September. So, Paige, if you would please kindly timestamp the broadcast. It's about 3:45 on Thursday afternoon, September 4th. We're out of Labor Day, out of the 3-day weekend, in the new month, in a shortened trading week. We talked about that a lot, Jay, coming towards the end of August there of what managed money might do. We had seen some slight recovery in the corn market during the end of the month of August. Meal had also kind of run up a little bit, but maybe has pulled back. So, Jake, you've been watching the screens while I've been out running around Minneapolis. What's been happening in the markets this week, Jake?
We've seen a little bit of movement in futures, really some opportunity in protein there. Soybean meal back down, revisiting the lows that we set at the end of July. Still, a handful of dollars away from the bottom, but back soft enough to take some action if you hadn't got it done the first couple of times there. So opportunity there. I think basis in general in soybean meal, canola, and some of those other protein markets has been steadily under pressure. Hasn't moved a whole lot in recent weeks, but cash prices overall are very attractive. Soybean oil finally closed the gap on the December contract down there at around 51 cents and some extra change. So that market seems to be maybe stabilizing a little bit, found a little bit of a range here between $280 and $300 a ton on soybean meal. Again, very attractive place to be taking ownership. There's still a healthy carry in that market out on the futures curve that we think could come in over time, but a lot of folks took action early. in the year, and another opportunity to get some done if you had more to do on that side. Corn, a little less attractive as a feed buyer, still flirting with the 420 mark on the December contract, but off the highs that we set here just over the last few days. Really struggled to get back up to the 420 mark here today at the very end of the session. Seems like there's going to still be some room for that thing to feel some pressure, especially as we continue to get a little bit of early harvest data coming in, a lot of silage coming off the fields right now. And by and large, the notes are that folks are coming in close to their usual averages or on the high end of their normal average range for the early stuff, things that didn't quite benefit from some of the midsummer rains as much as their later planted crop may have. And this goes for stuff in the southeast, over in the southern plains, up into some of the parts of the Midwest that have gotten off to a little bit of an early start. And most of these folks are saying, they get into the next 70-80% of the crop that's still out there, and it looks a fair bit better. So expecting to be a few tons to the acre over their normal yields. Some folks even saying it's the best that they have ever had. So I think what that tells us is that the bottom end of these yield expectations could come in close to where USDA had originally posted in the low 180s. And just depending on how this thing finishes out, there are still quite a few industry analysts expecting something in the high 180s, seeing some numbers come in here just over the last couple days. So hard to know how that thing finishes out. I think we'll have combines running through the field, shelling dry corn in the matter of weeks. I know there's some of these southern parts of the grain belt that have got out and tested their first few acres here this week, and reports are pretty good. So this market seems to also have found a range. Very difficult to break under $4. We went up and tested 4.25 here a few days ago, and that little range seems to be holding until we get more accurate data coming out of the field. So opportunity on the basis front as this market has rallied back up and farmers can go out and sell a little bit of their crop. Basis comes under pressure a little bit there. I don't know that the market's going out and showing that in wide swaths, but if you go bid your vendors, you can get them to pull down a little bit on their price. So some opportunity then in that sense.
It has been an interesting little stretch here of since that WASDE report in August that we talked about so much to this stage, but just that shock of sell the rumor, buy the fact type of mentality of we did achieve a low of 392 and change, and then we rallied. Right, we've had this big rally. This big rally has led us to 420. Overall, this has still been a fairly subdued rally. We've had about 25, cents or so. But also in the grand scheme of things, I think it depends on which chart you're analyzing. But you could argue, like you said, Jake, we've largely stayed within the channel that we've been trading now, dating, I'd argue, all the way back to April. We are flirting with the upper threshold of it. I could even say on maybe Tuesday, we actually did close through it, but then pulled back yesterday. Today at a slight recovery, but still, it's just not that element of we're continuing to scream higher. We're seeing a lot of folks willing to step in and sell and or stop buying at 420. Whereas, like you noted, Jake, that sub $4 was folks were eager to buy and or cover their short. So that range that we're working with of 20 cents, it's going to be super interesting. We do have the WASDE report on September 12th here coming up in the next week or so. I believe it's next Friday. So perhaps, the speculation heading into that would be, does the USDA pull back yields and get to that, maybe a little bit closer to the mid 180s, or do they stick to their guns for the time being? I did have the privilege of speaking with a couple of our dairy farmers that farm in the region, as well as a row crop farmer that farms in southern Minnesota. Really interesting commentary from those gentlemen regarding how weather has, differentiated between different parts of, let's say, getting into central northern Iowa versus southern Minnesota to mid-northern Minnesota. But for the most part, things still look pretty darn good, right? Are they perfect? Not necessarily, but pretty darn good. And so again, like you asked, Jake, how far back do we actually pull this thing in terms of the final yield number on the USDA? August was a bit dry. I think maybe that's why things have been not as perfect in some parts of the Midwest. I'd say for that, especially the Eastern belt. But Jake, we talked about this last week too. And cash is leading the way, right? I think cash is providing that opportunity. And maybe futures markets continue to reflect that here as we push through the month of September here. So, is there any action to be taking at this moment, Jake? Let's say we head into that WASD report and see some continued movement in basis. Do you have any areas here where you say, hey, a lot of guys have bought up some Octave D's on corn, but if they haven't already, let's look for this and or step into Jan forward. What are your thoughts there in terms of maybe some potential action items as we work through this thing?
Yeah, I think on corn, basis in most regions is good enough that if you see a futures value you like, you can very confidently step in and book the cash price with your vendor. So, like you said, October, November, December, I think anything close to $4 or just a little under $4 is worth stepping in and getting something started there. The Jan, Feb, March window still has a pretty healthy carry to it versus December. So you can be a little more aggressive and push that thing down closer to $4 as well. I don't know that you have to be too urgent with the prices we're at today. I mean, it feels like a place to sell some corn at 420, right? So putting in some targets to at least get the first healthy layer on, and then maybe some sort of an option strategy on the back half of the feed year for corn. If we do see a nice 20 or 30 cent break, I think the cash market, like you said, is indicating that this thing could work lower on both basis and futures, just because basis across the Midwest really hasn't had to work too hard to move corn this summer. The end users seem to be getting what they need at relatively modest values. We got a big crop headed our way now. And so I think you have to at least give it a chance to go retest the lows of last year down there, 385 ish type of number. And with the balance sheets that we've got, potentially, if they hold together, maybe you break below that yet. There's still a lot of wonder about the demand side of this thing with the export numbers that are there and the feed numbers that are there. And we continue to go back and forth with some of these tariff discussions of will they, won't they? It kind of seems like the market has brushed those to the side for the moment anyway. But the opportunity seems to be that if you can go out and bid a really confident number down towards some of last year's lows, if the day is right, you can get it filled with your vendor. It just needs to be in front of them. They're not going to go out and offer it outright for most of these people.
Yeah, that's very good advice, Jake. Get those bids working. And of course, if you want some assistance there, please reach out to Jake and the Feed Foundation squad here at EverAg. That's exactly the service he is offering to folks. And Jake, I think it paid off as we worked through that August WASD report. You had some bids working and, they happened to hit as opposed to, kind of waiting for that offer. You're not always going to, get that call. So it's better to have those working. And, speaking of having those bids working, I mean, you talked about the export market, the USDA, and we keep beating this one up too, but the USDA is calling for record corn exports for now what is the current marketing year as we are in September. I think the weekly sales numbers we've been seeing from the USDA as we wrapped up August and moved into September were strong. I do think it's noteworthy that in terms of the, what the USDA will release, we call them flash sales. So the USDA will announce in between their export sales and inspections report when a single sale of a certain size has occurred. Usually it's let's say a literal boatload, sometimes less of, corn, bean meal, beans, etc. We have not seen one of those flash sale reports other than soybean meal. We're pushing towards 2 weeks now. So I think that's going to be interesting too, is we did have the Labor Day holiday this week, so we're delaying our reports. And I think we'll see export sales tomorrow on Friday. What will that look like? And what will exports continue to look like the rest of September? Because it continues to feel like, for the most part, our former larger trading partner, China, again, continues to stay away on corn entirely. Beans, they're trying to. And it'd be interesting to see what our, let's say, more recent and or steady trade partners of the last year or so on the corn side think. Mexico, Korea, Japan. Are they going to stay as aggressive and hungry on this thing? Because if they have been, we're not seeing it reported on the daily basis, at least from the USDA. So just little things we need to keep watching as harvest starts to pick up pace here in the next week or two. So with that, let's wrap things up. Thanks for holding down the fort this week. Really appreciate it. Hope you had a wonderful Labor Day and a great trading week this week, Jake. And even though you've got some really interesting friends in the basement there, I'm just glad someone's keeping you company. That's all.
I appreciate that, Jim. Good to have you guys back.
Yeah, Paige. It's good to have those guys back. Now, we would like to thank the Everag Insights crew for their support. We'd, of course, like to thank Paige for her production magic, and thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.